Hey traders, this is Blake Morrow with Traders Summit, and with me today is Jim Welsh from Macro Tides. Jim, how are you? Good to see you on this Friday, as always.
Double thumbs up, right?
Yeah, right. And speaking of which, double thumbs up. I'm sure people that are looking at the equity markets right now are probably thinking the exact same thing. Like, close the markets. There's some concerns right now in China about this Evergrande, right? The
Yeah.
large. Well, I think one of the largest developers in China.
I think they're the biggest, 300 billion in debt. That's big.
That's a lot of debt. Let me ask you, how do you think this is affecting the markets? Because I remember from your newsletter back early summer, you talked about the yuan or the renminbi, about it peaking and really looking at the exchange rate. We haven't seen those levels since then. It hasn't gone any higher since your newsletter, so well done. Right. But do you think that might come into play with China over the course of maybe the next week or so?
Right. Yeah. What you're referencing, Blake, was back in June, identifying 5 waves up in the renminbi, and to me that indicated that there's going to be a correction and pullback. I think the pressures that are building up as a combination of pressures. Economic growth has slowed a little bit more than people anticipated. China's had some Delta outbreaks. A couple ports had to close for a week to 2 weeks. And now Evergrande is infecting the other property issuers in China. And the net result is Evergrande, I think, is down 80% or more in terms of its equities. Its bonds are down almost a comparable amount. The high yield index in China is above 14%. So obviously there's a fair amount of stress going on to have yields at that level. And so I think it's definitely worth watching. I think there's a potential here that you get a policy response by China in terms of the PBOC easing monetary policy, either through a reserve rate reduction, spurring lending in some way, or as an addition to that, China saying, hey, we want to see our currency drop as they did in August 2015. So I think all those things are on the table. And until we see this start to wind down, it is, I think, an issue that has to be monitored.
Okay. Yeah, I was going to say, the PBOC is going to try to respond a little bit. And I guess, in the face of having a slowing economy as well.
Yeah. I mean, again, as I said, there's multiple pressure points, some of which were existing before. And China has been systematically kind of whittling down some areas, and especially the billionaires and so forth. I mean, a number like Alibaba, I think their stock is down 60% or something. I mean, so they're intentionally doing some of this to get a goal that they think is of value. And now Evergrande shows up, and it kind of, I think, complicates things. So are they going to take a step back? And one of that would be obviously changing monetary policy, at least in the short term, and lowering their currency. And, that when I wrote about it in June, it was of the mind that if China starts to lower their currency, it's going to have an impact on other emerging market currencies as well. You get a spillover effect. Yeah. So as we've talked, my thought was the dollar was making a very important low late May, early June. And my bias is that the next 6 to 12 months, the dollar is going to continue to work its way higher. Well, this all fits into that. At times, the dollar is stronger, not because things are wonderful in the U.S. It's just that things are not as good in other places, and their currencies are weakening. And I think that's part of what's happening. As I've noted, the Fed is moving toward tapering. The ECB is going to move there, but they're behind the Fed. And that, I think, is another support for the dollar, because I think because the ECB is going to move more slowly, I think that weakens the euro.
Well, let's actually turn our attention then to the FOMC. I know, well, you've had your opinions about the FOMC over the last several weeks. Here we are, we're just a few days, less than a week away from the FOMC rate decision. Has anything changed in your mind?
Not really. All along my thought has been they'll tee it up at the September 22nd meeting for November 3rd. Questions arose whether they would do that or even postpone it more when we had the softer employment report. Overall economic numbers have come in a little weaker. The Delta obviously playing a role, but what we've seen is Delta looks like it peaked in the last 2 weeks and is coming down. The retail sales number was very, very strong because that was held down by a 14% drop year over year in auto sales. So I think some of the concerns that some of the members might have had, I think have been alleviated a little bit. So I think, yeah, for me, I still think November 3rd is the most likely, official announcement.
Okay, well, that's what I wanted to hear. Just see if anything's changed in your front. So, as far as the China situation, we do need to monitor it carefully. And one of my takeaways here is, as you're watching the yuan or the renminbi, we have seen some emerging market currencies. As you said, you talked about some spillover. If you look at the rand, you look at the peso, both of them are down a little bit. And I think that, I don't know if this is necessarily a response to that, but I think that it's something that could, as you pointed out, could very well spill over into other emerging market currencies.
Well, the other issues that those countries are dealing with, food costs are a huge part of the average person's budget. And global food costs have risen fairly significantly. And so you see the inflation rate in countries like Mexico, Brazil, India has been ticking higher. And a number of central banks, emerging market central banks, have already increased rates. We're going to see more of that in the coming months. So, like everything, it isn't just one issue, obviously affecting the emerging market economies. There's, they have domestic issues that they're dealing with, and then you throw something else on top of it, and they begin to compound. So I think the odds are, despite higher rates in a number of emerging market countries, those currencies are going to be vulnerable.
Okay, very, very good. And one last thing, Jim, you've been spot on with your equity market calls. Last week we were getting towards all-time highs. You're like, look, I've told our readers that you're looking for a little bit of a reversal and to be maybe tactfully short. Right. Here we are trading below 44.50. Any key levels that you're looking at in the S&P right now? 4,400.
One of the things I've highlighted, Blake, and for weeks has been call option buying on big stocks above the market, which then forces the dealer community, who are then short those calls, to hedge those positions. And that's been why the market just keeps grinding higher, because the call option above the market has been very strong. If the market pulls back below 4,400, all of a sudden those call options will begin to lose a lot of their value. Now the dealer community doesn't have to continue to hold the long positions that were used to hedge their call exposure. So this thing could unwind where you drop enough, and I think below 4,400 it begins to happen, where the dealer community then begins to sell the longs that they have because they were put on as a hedge. And when the other side of the hedge starts to lose value, then you don't need to hold the long side. So I think there's the potential that you could see a pretty quick unwind if the S&P drops below 4,400. When I look at a lot of the sectors that I cover in my weekly letter, Blake, the charts really don't look all that great. They all, many of them look like they're on the cusp of breaking down. We have to watch the 10-year Treasury yield above 140 on a closing basis for a couple of days. I think you'll see yields start to pick up more noticeably. So I think a lot's going to be happening in the next 60 days.
Thank you very much, Jim. I appreciate your input. I think that we also need to be very careful. And the 4,400 level, it may seem 40 points away right now, but that could be here quicker than you think.
Yeah. I think just the action of the market, the way it's behaving, we've seen a number of gap ups and then selling come in. And that's the exact opposite of what we've seen for months, where you'd get a drop and then buying would come in and the market would finish strong. That has really changed character. So I think that's an important message in terms of how the market is trading.
The behavior of the market. Well, Jim, thank you so much for your time. I always enjoy my time with you every week, and I know our viewers do too. And remember, if you want to get more from Jim and learn how to get his newsletter or sign up for his newsletter, click the link below. If you're viewing here on Traders Summit. Jim, thank you so much for joining us this week.
Hey, so much. I appreciate having our chats, Blake, on Friday. It's a great way to wrap up a week, and you have a wonderful weekend.
You do the same.